How do you determine the size of a company? Well, the market capitalization is the total worth of the company's stocks outstanding and is the main measurement of a company's size. You get this number by taking the stock price multiplied by the number of shares outstanding. So if the stock price currently is $100 and there are 100 million shares outstanding, then the market cap will be $10 billion. You can also easily find this number by Googling the stock symbol and the number will pop up. So if we Google Amazon, the market capitalization is this number right here. The market capitalization only looks at the stock price and not the actual value of the business that is calculated from its financial statements. In other words, market capitalization is not equal to the intrinsic value of the business. The market capitalization can be more or less than the intrinsic value. If the market capitalization is above the intrinsic value, then the stock price is overvalued. If the market capitalization is below the intrinsic value of the business, then the stock price is undervalued. Based on market capitalization, stocks are categorized into mega cap, large cap, mid cap, small cap, micro cap, and nano cap. Mega cap companies are 200 billion or more. Large cap companies are 10 billion to 200 billion. Mid cap companies are between 2 billion to 10 billion. Small cap companies are between 300 million to 2 billion. Micro cap companies are between 50 million to 300 million. And nano cap companies are under 50 million. Mega cap companies are considered to be the safest with the least amount of volatility. And the risk and volatility increases as you go down the group, with the nano cap companies being the riskiest and most volatile category. However, mega cap companies generally would have less growth because they are already large established companies, and nano cap companies would have the most amount of growth potential. By the way, I made a 4-step guide on how to evaluate and find stocks that has a durable competitive advantage for long-term investment purposes, which you can find the link in the description box below. Also, if you haven't subscribed yet, hit the subscribe button and the bell so you'll be notified every time I post a new video about investing. Now, back to the video. Keep in mind the current large cap companies were once a nano cap company too. For example, imagine you bought Amazon back in 2000 when it was only $10. However, it wasn't well known back then, and no one knew that a company called Amazon would be one of the biggest companies in the world right now. So it's hard to guess among all the small cap and below companies which one will make it big and which one would go bankrupt or stay small forever. There are also indexes to measure the performance of the different market cap group as a whole. For example, the S&P 500, S&P Mid Cap 400, S&P Small Cap 600. So if you want to invest in a market cap group as a whole rather than individual companies, you can find an ETF or mutual fund that mimics these indexes. If you put money in all 3 indexes starting in 2017, the large cap S&P 500 grew around 92%, S&P small cap grew around 79%, and the S&P mid cap grew around 75%. But you can see here that before the drop in 2018, the S&P small cap index actually outperformed the others. Also, when I analyzed the 3 indexes by having a beginning date just before the COVID crash around March 2020, then the S&P small cap grew the most, followed by the S&P mid cap and then the S&P large cap. Therefore, historically, it seems that in the very long term, the large cap group outperforms the others. However, in the short term, it's hard to predict which market cap group would do the best. For more videos, check out the playlist on stock investing for beginners and stock investing terminologies.